afternoon, everyone. I am Hyunwoo from Team 2. Do you know why media companies' stock price increase? The key driver is upgrading content power. As you see here, Disney achieved 300% returns over the last 10 years. This is mainly because of acquiring the popular characters from Toy Story, Avengers, and Star Wars. In this perspective, 2018 will be a year of tremendous change for CJ The company is upgrading its content power through IPO of Studio Dragon, who already created the famous characters from 도깨비, 응답하라, and 미생. So, wondering who the next spotlight will be? If so, we recommend you to buy the stock. We suggest a target price of 15,000 Korean won with 25% upside. Well, CJ has complex business model. However, the core is very simple. First, making content. Second, monetization. So media division's dramas on TV and online channels, movies targeting for Asian-wide market, and music labels shown on various music players such as Melon and Mnet. And overall, media division holds 74% of total revenue, movies 12%, music 14%. Mr. and Mrs., you must buy the stock because of media, music, and then Marvel. Media division revenue will increase by 10.8% in 2018. This is mainly because of TV ad unit price increase and high OP margin of digital ad. In the music division, the legal change in music revenue structure will drive 12% sales growth in 2019. And lastly, non-operating value from Netmarble will largely contribute to the CJ stock price increase. Next, Sunyoung will talk about the media division in detail. Hey Sunyoung.
Thanks, Hyunwoo. The media division, overall profit growth and OP margin will be improved. Revenue will grow by 10% annually and OP margin will reach 7% in 2021 from 4% in 2017. This profit growth comes from the two factors. First, TV ad unit price increase in TV channels like TVN and OCN. Second, high margin of digital ad. TV ad unit price increase is deeply related to the IPO of Studio Dragon. More than 200 billion won will be financed and used in drama production. Therefore, Studio Dragon will make over 40 dramas in 2020, which is 10 times more than competitors. Corresponding to this additional drama production, CJ is adding drama slots in its channel. As rebroadcasts are replaced by new dramas, TV ad unit price of newly added slots will increase. Plus, digital ad revenue will also get boosted from more dramas. Digital ad revenue is ad sales from online channels like YouTube and Naver TV. As digital ad is based on TV content, there is no additional cost for it. Surprisingly, its OP margin is over 80%. Therefore, operating leverage will arise from this revenue, which leads OP margin growth of overall media division. Next, Youngjin will cover music and Netmarble.
Thank you, Sunyoung. Now I will talk about the music division and Netmarble. In the music division, the revenue will increase by 12% in 2019. This is mainly because of the legal change in the music revenue structure. The government under President Moon declared that the revenue ratio of copyright and platform will be changed from 6:4 to 7:3. In this case, CJ which has the largest portion of the copyright sales, will be the most beneficiary from this environmental change. In addition, the platform companies like Loen are expected to increase the streaming price to defend their revenue from the legal change. Then CJ will fully benefit from this price-driven market growth in 2019. And next, CJ 22% stake in Netmarble will increase the stock price of CJ ENM. This is because the Netmarble stock price is expected to increase with popularity of the game named Lineage Revolution in the worldwide market, especially in China. The Netmarble's equity value now accounts for 66% of CJ ENM's current market cap, and the correlation between two stock prices is 0.9. Therefore, the success of L2R will largely contribute to CJ ENM's stock price. As the South sanctions by Chinese government have relieved, the entry of L2R into China is certain in 2018. The success in China is definite because the game already has successful performances in Japan, North America, and Europe, where MMORPG was not popular. So we expect that the Netmarble will make about 4 trillion won in 2018. Next, he will explain the valuation of CJ ENM.
Thank you, Youngjin. Now, how can you value this promising company? We conducted sum of the parts valuation and suggest you to buy the stock with a target price of 115,000 won and 25% upside potential. The reason why we use SOTP is because there is huge non-operating asset value from Netmarble. To value this, we multiplied 22% ownership rate and discounted 30% from its market value. Next, to compute operating value, we utilize 5-year FCF model. There are some key assumptions. First, beta is estimated to be 1.1 using bottom-up methods. WACC assumption is 9.1%, and terminal growth is expected to be 1.3% based on Korean long-term GDP growth rate. As a result, we arrived at CJ ENM's operating value 2 trillion won. It's not the end. We cross-checked our DCF valuation using relative EV/EBITDA multiple valuation. You may ask, why EV/EBITDA? First, the company's net income includes significant equity method gains, which is not from the operating activity. In other words, net income-based multiples such as PE cannot represent the pure operating value. Also, EV/EBITDA can normalize amortization effect, which is crucial to content companies. Now, the peer group is comprised of regional and major content companies with comparable market cap size. Our relative valuation suggests that the operating value is 1.9 trillion won, which supports our DCF valuation. Well, is this pretty attractive investment so far? Dong-hwan, are there any investment risks?
Thanks to you. Okay, there are two risks when investing in this company. First one is unstable performance of the movie division, and second one is decreasing TV ad market. Firstly, the movie division's unstable operating profit has made people hesitate to invest in this company. This is because competition is intense in the Korean movie market, which is already in maturity stage. As you see here, theater visit per capita of South Korea is the highest in the world, and overseas competitors like Disney and Warner Brothers are penetrating the market. However, CJ ENM will offset the decline of domestic sales by overseas sales. This is because the company is about to enter Chinese and Southeast Asian market, which have high growth potential. Secondly, TV ad market is decreasing. However, CJ ENM is expanding the other monetizing means such as digital ad and overseas content sales, as you see this chart. From these reasons, we expect the market risk on CJ ENM will be limited. Back to Hyunwoo.
Thanks, Joanne. So lastly, our investment summaries are first, profitability improvement in media, second, favorable legal change in music, and third, non-operating value growth from Netmarble. Therefore, we suggest a buy recommendation on CJ ENM with target price of 115,000 Korean won with 25% upside. Thank you for listening, and now we'll take your questions.